Alrighty, what's going on, ladies and gentlemen? Welcome back to the channel for another weekly update. We have an exciting week ahead of us. We have FOMC, and I personally will be playing this FOMC event with a strangle because we have no idea what's going to come out of that. We have a bullish monthly and weekly setup, in my personal opinion, but the daily setup does not agree with that. And at the same time, it would make sense to me that we would get some bearish news coming out of FOMC. Maybe they do hit us with the 75 basis point hike, but then have bearish guidance when Powell speaks afterwards. So let's just go over the technical setup, and then we will talk about FOMC after said technicals. All right, so starting off with QQ, we're going to go over the monthly, then the weekly, then the daily, and trickle down these time frames. So yeah, starting off with the monthly time frame on QQ, you have a bullish Rami candlestick setup with your stochastics crossing up right here. K is crossing up through D. With your CCI hinge, it's the same exact picture over here on SPY, except your CCI is hinging a little bit more, but you have your stochastics crossing up there. We come over to VIX over here, and it is the exact opposite setup. You have a floppy arrow right there, but what is it pointing to? It's pointing to a bearish engulfing candle that is a monthly bearish engulfing candle on Mr. VIX, and that's why I said we do have a bullish looking setup on the monthly time frame and the weekly time frame, but that the daily is not it's not set up to do so. All right. But yeah, going over to the weekly time frame on QQ, we do have QQ ending out the week right underneath resistance. And the next resistance really is all the way up here, up at 294 for QQ. Over on SPY, the next resistance after this is up here at pretty much, yeah, up here at 409, or you could say up here at around 411 up there, which just so happens to be this downtrend break price target that we had put on the board. But I don't think that will be hit, just because I do believe we will be coming out pretty bearishly after FOMC. I don't think it's going to be good, just because we are rising into the event. All right, so on the weekly time frame, your oscillators are pointing straight up, and your RSI is coming through 50 right now as we speak. It is at 48, and then on the VIX, you have this absolutely massive, just bearish looking candle. It's not any specific candlestick formation. It's just, yeah, it just does not look good. Clearly, you have your stochastics heading down, and you have room to fall, just like you have room to rise over here on the indices oscillators. All right, now going over Bitcoin, we're gonna start off well, actually, yeah, let's see what is the weekly setup looking like. Honestly, I mean, yeah, you can rise or you can fall here on Bitcoin. Let's actually look at the monthly as well. What do you have? You have a bullish, is that a bullish engulfing candlestick? We have a bullish engulfing candlestick on the monthly time frame of Bitcoin. Which again, this is just another bullish setup we got going on here. But I will say it's off of declining volume. You know what? It doesn't really have a lot of strength behind it, but you know, you do have this target of this downtrend right here. Now coming over to the daily setup here, we're going to start it off with Bitcoin. You have a bearish daily divergence, a daily bearish divergence going on. I mean, it looks like you can come up and maybe you make a new high here, a recent high, so a minor high. And you come up and form this divergence. Whichever way it plays out, you definitely do look like you are forming a divergence. It looks like you will be finishing it out relatively soon. And yeah, your stochastic is crossed down, and this is right ahead of an FOMC event, which leads me to believe it will be bearish. On the daily time frame, we do have a bullish engulfing candlestick with inclining volume, which that is a solid thing right there. You have your stochastics pointing up, K is going through D to the upside, and you have your CCI hinging straight up, and then you come over to SPY, and it's the same exact picture. But what both of these have in common is you look like you were heading straight up, and you were forming a bearish divergence. Now QQ, you're still carving one out. SPY, you already have one going on. All right, you already have one. You broke that high, and you are, yeah, I mean, your setup is the same exact picture as Bitcoin, and Bitcoin moves with the market. So you got both of them in agreement there that you were setting up to fall. And that's why I say I don't think this 409 target will be hit. Now, maybe we do have some crazy 2 sessions coming up, the next 2 trading sessions. Maybe the market gods are going to elevate us all the way up there. I don't think they are, though. But I will add that last time you formed this bullish engulfing candlestick right there, look at this volume you had right there. It produced 2 days of declining volume here, and then you end up starting your fall there with a bearish Rami setup, followed by a bearish engulfing candlestick, which then got engulfed by a bullish engulfing candlestick, again with the bipolar daily candlestick. So again, keep that in mind. It doesn't have to play out like this. Maybe we do end up just falling before FOMC. I have no idea. But here's the thing, guys. Anything can happen going into FOMC. Oh, by the way, we can look at the VIX's daily chart. It's nothing special, though. So we'll finish off with this. You do have your stochastics crossing down, and your CCI is hinged down, along with your RSI. Now, I did point out in Friday's video. I think in Friday's video, I definitely did during the Weeble update. Maybe not in Friday's video, though, but I definitely did in the Weeble update. Which, guys, by the way, I am going to be posting it here to YouTube, the updates, but I also want to tell you guys I will be starting to post my updates on Twitter. I want to see if it can gain a lot of traction over on Twitter, because, I mean, it definitely has, my analysis has gained more traction on Webull than here on YouTube. In like 1.5 months, I've gained 1.2K followers over there. I'm going to see if I could do so on Twitter and see how quick that gains traction. And I'm just gonna block the haters. There's gonna be a lot more haters on Twitter than Weeble or YouTube. So I'm just literally gonna block every single account that is turning out to be a hater, and that's just how I'm gonna do it. But yeah, I will be posting them over there. So I probably won't be posting them here once I do start that, which likely will be within the next few days. I'm gonna be setting up my Twitter. But yeah, I'm just letting you know, if you guys do not have Weeble, or you don't want to go do that, there will be a Twitter option. So there will be a written update posted over there daily for free. So that will be there'll be a cool new addition. So the last thing we could do is we could just look at the 4-hour setup, what we got going on here. The last thing technically we could do, we're still going to talk about FOMC and how I'm playing it in a second. You're coming up to resistance, all right? And at the same time, you're starting to curve down in your stochastic. You're curling down right there. Your RSI is curling down. Your CCI is hinged downward. It's the same exact picture on SPY, except you broke out past this resistance, slash you're kind of right at it. I mean, if you did it over here, this is just the intraday high over there for 389.31. But technically, it's a little higher. But I personally do believe you are going to go a little higher. But if you do not, and you do fall, it would make sense to me. And it's strictly because of this. All right. So you have this right now. I do believe it's still a bearish divergence, 188 over there. Right here, you got to 189.52. So it's still a bearish divergence as it stands right now. So it would make sense to me if you did fall in pre-market, or like fall going into open, and then you start rallying for the day, or you fall like to midday, like lunchtime, and then you start rallying. And that would give this a chance to fall like that, and then boom, it's or not like that. It would set it up so this thing doesn't end up nullifying the bearish divergence we got going on there. So that would make sense to me, and it also would allow SPY to come back and retest this, and you could see something like that happen. So it's like that, and then here's FOMC, and then whoop, now you die. All right, you fall off the cliff, which I personally think you are going to be falling off the cliff. And over on VIX, you still have this 4-hour bullish divergence over here, and it looks like it still has room to fall. So you could go like see something like that, and you could really end up coming down here. I mean, on VIX's daily time frame, the next support is really all the way down here. I don't think you're gonna fall down there though, so nothing to worry about in terms of that. All right, so yeah, FOMC guys. All right, so I am personally playing this with I already have the December 16 puts. I had the November 18 puts, half of what I'd started that with. And I am going to be taking the Strangle. The Strangle will have Friday's expiration on it, because I fully acknowledge that you can have this thing go both ways. It Doesn't matter to me. I'm gonna benefit either way. Honestly, best case scenario, like I don't want to see more pain, which is why I'm taking that strangle. So if we do end up, like, if FOMC is bullish and we rally, I don't think it's going to last long. I think we would have a short-term rally. I'm not going to call it a relief rally because I think that's exactly what we just had. I also want to point out right here, this is pretty much like, this kind of looks like a bear flag to me. We can like literally just copy this line right here. How do I do this? Is this shift? Not shift. How do I copy this trend line? Oh, I don't know. We will just make a new trend line right there. I'm pretty sure, guys, this like really does look like a picture perfect bear flag we got going on here. And like maybe the leg is all the way there. Maybe you're coming all the way. No, you're not coming all the well, I don't know. Maybe you do. I don't know, but it's the same exact thing on SPY. So I'm just saying, guys, this thing is setting up to be it's setting up to be pretty rough, guys. Look at this. This looks like a picture perfect bear flag, does it not? VIX, the bull flag. This is not. No, it's not setting up to be a bull flag. Look at this. You also have this little thing down here with Mr. Bitcoin right there. All right. So I'm just saying, guys, it is setting up like it's rising going into FOMC, so it's setting up to be bearish. So I'm playing it with the strangle, but just realize I still have my puts, so I'm gonna be way more heavy on the put side. But since the strangle is shorter term, if we do get that knee-jerk reaction to the upside for like a day or two, then I will be, you know, I'll be taking profits on the strangle, and then I will, which one of the sides, guys, I'm finally playing this right. I got to figure out how to make this my money printer, and like all I need to do is figure out how I can get 100% return off of every single event, which that the only way possible, in my personal opinion, is through a short dated strangle. So yeah, I mean, every single event, I want one side to go to 0, and I want one side to go up. I need them to go up 200%. So the overall position would be up 100%. I want both the same amount of money on both sides, because one side guaranteed will be going up massively, and then one side will guaranteed be going to 0. That's just how I want to play it. So in order for that to happen, I need it to be short dated. And since we have these like CPI and FOMC events, like these big events, it's guaranteed to bring volatility. Like this, I believe, was CPI or FOMC. This over here was CPI or FOMC. This CPI or FOMC. Just saying, guys, like these produce like good events. And if this was a CPI, I don't know if this was an FOMC over here. Maybe it was. But I do think this was a CPI or FOMC event. Look, we're at the same exact spot. I think it was. It might have been over here where we had FOMC. It was either here or here. But both of these was CPI. Oh, if this was CPI, then this had to have been FOMC, because CPI is always on the 13th. Yeah, because this was look at that. I don't know if that, maybe that was also an FOMC event over here. I don't know. But yeah, guys, that's how I'm playing this. I wish you guys luck, but either way, I will be back with an update tomorrow. So I will be here tomorrow. And yeah, stay tuned for the Twitter updates. I'm pretty excited for that, because I know there's like a lot more people on Twitter than there is on Webull. And if traction is gaining over there, I can almost guarantee traction is probably going to come pretty quickly over on Twitter. And then boom, guys, we're already at 2,000 total followers between the two platforms. And might as well add a third. All right, guys, with that being said, I will catch you guys in the next update. Peace.